gentlemen, good day and welcome to the CSL Finance Limited Q2 and H1 FY26 earnings conference call hosted by TIL Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Sayam Pokharna from TIL Advisors Private Limited. Thank you and over to you, sir.
Thank you, Shruti. Good afternoon, everyone, and thank you for joining us today for the Q2 and H1 FY26 earnings conference call of CSL Finance Limited. The investor presentation has already been uploaded on the stock exchange and on the company website. In case you wish to add yourself to our mailing list, please feel free to write to us. To take us through today's results, we have with us from the management team, Mr. Rohit Gupta, Managing Director, Mr. Naresh Chandra Varshney, Chief Financial Officer, Mr. Chandan Kumar, Head Strategy and Business, Ms. Rachita Gupta, Full-Time Director, Mr. Atul Agarwal, President, Finance and Treasury, Mr. Chirag Gupta, Credit Head of Wholesale Segment. We will begin with a brief overview of the quarter and of the half year from Ms. Rachita Gupta, followed by a Q&A session. Please note that any forward-looking statement made during this call should be considered in conjunction with the risks and uncertainties that we face. These risks and uncertainties have been outlined in our annual reports. With that, I would now like to hand over the call to Ms. Gupta. Over to you.
Thank you, Sayam. Good afternoon, everyone, and thank you for joining us today. I'm pleased to share the highlights of CSL Finance's performance for the second quarter and first half of FY26. After a year of consolidation in FY25, particularly in our SME retail business, we are happy to report visible progress in the first half of this year with a stronger performance in Q2 compared to Q1. At the same time, our wholesale vertical has continued to grow steadily even during the consolidation phase, demonstrating the resilience of our business model. Now, let me begin with our AUM performance. Our AUM as of Q2 FY26 stood at 1,397 crores compared to 1,157 crores at the start of the year. This represents a healthy 29% year-on-year growth and an 8% sequential increase over the previous quarter. More importantly, while our growth in Q1 was largely driven by wholesale vertical, the momentum in Q2 was more balanced, supported by healthy contributions from both SME retail and wholesale segments. Disbursements during Q2 remained broadly in line with the previous quarter, showing a stable trend with no change on a year-on-year basis and a moderate 4% sequential decline. However, within disbursements, SME retail disbursements have shown a notable upturn, growing by 93% year-on-year and 61% sequentially, although on a relatively smaller base. This reflects early success from the corrective measures we have implemented over the past few quarters in the SME retail segment, particularly around refining our credit policies, optimizing our product portfolio, strengthening our underwriting processes, and restructuring teams and SOPs. We view this performance as an early sign that our effort towards growing the SME retail vertical are starting to yield tangible results. Having said that, while the improvement in Q2 has been encouraging, the broader industry still faces a lot of headwinds. Challenges such as over-leveraged borrower profiles, muted income growth in the MSME ecosystem, and cautious lending practices across the sector continues to persist. Hence, our approach remains cautiously optimistic. We aim to drive growth responsibly, ensuring that the expansion in our SME retail book does not come at the expense of asset quality. Notably, while our AUM mix last year had tilted meaningfully towards the wholesale side, Q2 has seen a marginal positive shift in favor of SME retail. We intend to build on this momentum in the second half, targeting an overall AUM in the range of 1,500 to 1,600 crores by year-end. We also expect the growing contribution from SME retail to support improvement in profitability metrics such as return on equity. Coming to asset quality, we are pleased to report a steady improvement. Write-offs have moderated from the elevated levels seen in the previous quarter and recoveries have picked up. While some level of write-offs is expected to continue in the latter half of the year, we believe that by the end of FY26, most of the cycle will be behind us. We are not witnessing any significant delinquencies in the fresh SME retail book disbursed over the past 12 months, which reinforces confidence in the underlying credit quality. As of quarter 2 FY26, gross NPS stood at 0.51% compared to 0.56% in quarter 1 of this financial year, and 0.54% in quarter 2 FY25, while net NPS stood at 0.39% compared to 0.42% in quarter 1 FY26 and 0.32% in quarter 2 FY25. Moving on to financial performance, net interest income for quarter 2 FY26 was 14.9 crore, up 10% year-on-year and 2% sequentially. PAT came in at 24.5 crore, registering a robust 37% year-on-year and 15% quarter-on-quarter increase. It is important to note, however, that higher PAT growth is partly attributable to deferred tax adjustments. To that extent, PBT provides a clearer view of underlying performance, coming in at 28.85 crore, up 17% year-on-year and 5% sequentially for the quarter. On the operational front, we have continued to strengthen our distribution and funding base. 2 new branches were added during quarter 2 and several spoke locations were rolled out with active ground teams, many of which will transition into full-fledged branches in the coming quarters. This expansion follows a hub-and-spoke model, allowing us to scale efficiently, manage costs, and ensure higher success rates for new branches as they mature. Our lender base expanded further with the onboarding of 2 new partners, City Union Bank and Paul Merchants, taking the total to 34 lenders. This includes a balanced mix of leading public sector banks, private banks, small finance banks, and NBFCs, giving us a well-diverse and stable funding profile. Our liquidity position remains strong with 111.5 crore of balance sheet liquidity and undrawn credit lines of around 35 crore. We've also started to see the benefits of recent rate cuts in our borrowing profile, with the cost of fresh borrowings reducing by approximately 60 to 70 basis points since the start of the year. This should gradually reflect in our weighted average cost of capital in the coming quarters as our borrowing is repriced. On the human capital side, we have undertaken targeted hiring, particularly at mid-management level, to strengthen credit operations and business teams. While this has led to some increase in employee expenses in the short run, it strengthens the foundation for sustained growth in the SME retail business. More importantly, on the attrition front, which was a key challenge for broader NBFC sector last year, has been brought under control now. To conclude, we maintain a cautiously optimistic outlook for the remainder of FY26. Our focus remains on driving disciplined growth, particularly through the SME retail segment, while maintaining a robust asset quality and liquidity, continuing to improve profitability. With the course correction over the past year starting to bear fruit, we believe we are all well placed to achieve our AUM target of 1,500 to 1,600 crore by year end. With that, we can now move on to the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pankaj from Molecule Venture. Please proceed.
Thank you for the opportunity. Sir, my first question is, I would like to take some guidance on the MSME disbursement growth side. Looks like we are back on the growth in disbursement side. So can you just give me a clear idea how sustainable this is, and can we improve the disbursement in the MSME business going forward in H2 maybe, or next year guidance?
Yeah, Pankaj, hi, it's Chandan this side.
Oh.
Pankaj, we are very, as told in our transcript itself, that we are very much looking after the growing our SME book, and the numbers have grown considerably, and we have are able to achieve per branch disbursement from like 25 lakh rupees, which was earlier 25 lakh rupees, to 35 lakh rupees average disbursal per branch, and we are targeting to increase up to 50 lakh rupees per branch disbursal, and with the number with proposed that in coming quarters we are going to increase our branch network also. So that is currently at 45. We are planning to increase it to 50 in coming quarter itself, and by year end it would be around 60 odd numbers. So you can expect a good growth into the MSME disbursements itself.
Okay, sir. Can we expect the 1,500 or 1,600 kind of AUM by this year end?
That has been already included into our transcript itself that we would be targeting around closing our AUM book by this year end in between 1,500 to 1,600 kind of structure.
And sir, my next question is toward the next year growth. We are targeting 25% of the growth for the next year. And what will be the part of the SME AUM for the whole 27 or 26 guidance?
Yeah, from roughly around 35-36%, we are targeting by end of FY27, we should be able to do 45% of the SME at least.
Okay. And sir, my last question.
Growth in our AUM. Yeah.
Okay. And sir, my last question is, what kind of benefit are we looking for from the rate cuts and impact on our cost of borrowing? Just would like to know the impact on NIMs, and will be able to pass on. Are we planning to pass on the benefits to the customer immediately or not?
Yeah, if you say year on year in last 12 months, roughly around 70 to 80 bips have been the benefit that we have seen, and going forward another 25-30 bips if provided no repo rate cut happens. So our effective cost, which was 10.9% 6-9 months back, as a reset also happens from the existing borrowings, it may come down to around 10.3, yes, around that target only. So with respect to retail, there is no such demand to pass on. Yes, but we have introduced one product at a little lower rate. Earlier we were targeting between 18 to 22%, and now we have also started one product which is priced around 16%. So overall our weighted average of retail will not come down, and a certain some portion of what we have may be passed on for our wholesale customers. So on wholesale, on totality, our NIMs will improve on the basis as we see the reduction in our cost of borrowing.
And sir, last question, if I may squeeze in. Can I ask last question?
Yeah, please.
Yeah. So other aspect, just I wanted to understand on the SME retail front. So we have some realignment our disbursement side or disbursement process. So just if you could give me a breakup like what were our previous disbursement, customer profile, ticket size or rates, and what is the change that we are bringing to the table right now?
Yeah, I would take that question, Pankaj. What earlier was, what we have found that the processes and the procedures were little hectic, a little bit jumbled. We have simplified the processes and made SOPs, and we made everything very much process driven. That's why this much growth has been very much evident into the numbers part itself. Apart from that, the range and the ticket size, that the target size of our customer has been increased. Earlier we were not, we are very much stringent to board only a kind of 18% or above that customers only, which are of very much marginal profile. But with this decrease in the or getting benefit of or lowering of that 0.70 or 80 bits of ROI, we have got an opportunity to increase our benchmark, target customer benchmark from 16 to kind of 22% ROI customers. So we would be able to get good customers at lower ROI, and we would be able to place ourselves into competition to the other peer lenders also.
And sir, what would be the impact of the changes on the operating cost of our business?
Operating cost, as we told in our transcript also, a little employee cost has gone up. That too, that we have strengthened our regional teams. So in all regions, and where certain regions need to be split up. So like a state of Gujarat, we have two regional regions. Earlier south and west, and the same goes with Rajasthan. Earlier we used to have one regional team. So that had added up our cost, but it has strengthened our team at the middle level, strengthened our processes, and as the disbursement picked up, these costs will get a portion at a higher numbers. And this in 1 or 2 quarters, a little higher employee cost will be there. But in the next 2 quarters, our internal projections are reasonably good, and it will get absorbed.
Okay, sir. Thank you for answering, and that's it from my side. All the best.
Thank you. The next question is from the line of Swanil Desai from Total Capital. Please proceed.
Hi, sir. Good afternoon. So my question is that, so you talked about increasing the branches to 50 and then 60 by year end. And next year, our, SME mix can go to 45%. Even if I assume 25-30% growth on overall AUM from, let's say, 1,500, 1,600, that means that, our SME retail will end up somewhere around 800 odd crores. So from current level to going there, what's the pathway in terms of, number of branches, AUM per branch, and how would such fast scale-up happen given, in the past we have faced challenges, on the SME side?
As a company, we always remain cautious, but now as we have worked a lot on our processes and building our middle-level team, and the numbers have started picking up, unless until something goes abnormally bad in the industry as a whole in the segment we are in, we are much more confident that this time we should be able to achieve. The focus of the company is largely on now building a good quality SME portfolio, and with already 15 spoke locations we have already opened in last 3 months. Those spoke locations are where we have few salespeople, and as we start doing business and we see the market in those newly opened branches, the full-fledged team and the branch gets in operation, and that will happen in next 5 months. So achieving this target of 800 crore, if the way we have planned ourselves, we think that we should be able to do it with the mix of we have added one product, a little lower IRR also. And now our focus is to, we are not targeting less than 10 lakh kind of a space too much, which is, I would say, a little, the security comes only as a deterrent, and the borrow is marginal, and lot of focus is there from every NBFC to go into that segment. And the target size is between 10 to 40, 50 lakhs. And so we see that we will be able to generate good business. And so the only now the SOPs has been made, the processes have been put into system, the attrition has come down, which was also a huge, I would say, negative for the industry as a whole. And whenever the attrition is higher, job productivity and quality goes down. So with the attrition coming, the had drastically come down, and the I would say what has happened in MFI and unsecured portfolio, a little caution has also come in the industry as a whole, as a large. So, and our company being totally into secured segment, now our 100% portfolio, both in wholesale and retail, is 100% secured. So we stand better placed as compared to peers in our size in the geography we are in.
Okay. So do we need to add, how many branches we need to add next year to kind of get to this 850 crore number?
Swapnil, hi. Yes.
Swanil. My name is Swanil, yeah.
Swanil, look, if we go by simple math also, we are targeting to increase our per branch disbursal to 50 lakh rupees, and we are targeting to increase our branch numbers to 60 odd numbers by this FY in itself. So with this growth rate only, if we are targeting to open 10 to 15 branches in next financial itself, I think that gives a pathway to achieve that AUM that we are projecting or that we are commenting on, that is a 750 to 800 odd crores of SME kind of AUM. So considering that, if we are able to achieve these numbers itself, the pathway will be very clear, and we would be able to deliver that what we are projecting.
and apart from this expansion that we are carrying out, there are a lot of opportunities also coming in, organic opportunities also coming in the market, and so that can be another way, but we are more focused on organic growth rather than inorganic growth. And with the processes and the team in place, achieving that target should not be an issue. If as the numbers in last quarter was decently good, then we have picked up, and the momentum is back among the team, and to achieve those numbers.
Okay, got it. Sir, second question. So, is it a fair assumption to make that when we move the productivity of branch from 20-30 lakhs to 50 lakhs, and even though we open new branches, there will be some kind of a operating leverage flowing through the P&L? Is that how we should look at for FY27?
Look, Sunil, the thing is that there is a life cycle of each and every branches. So this is an average of disbursals. The branches which have covered their 3 years or more life cycle, that's approx 23 or 24 odd branches, I have achieved a disbursal targets of around 70-75 odd crores lakhs. The approx 10 to 15 branches that is less than 2 years of life cycle, they have achieved, they are approx 30 lakh, they have achieved around 30 lakh rupees of business, and the rest branches which are less than 1 year or have completed a period of around 6 or to 7 months. What we believe that at least 18 to 24 months are required for any branch to fulfill or to give its full potential, that is a disbursal of around 50 lakh in average. So we are targeting that the way which we are projecting that 60 branch will be able to achieve their 50 lakh disbursal by first quarter of next financial year itself. So we would be able to achieve those numbers very easily.
Okay, understood. And last question on the credit cost side. So I think our write-offs have come down. You indicated that, write-off cycle may get over by end of this year, and this quarter our write-backs have been higher than the write-offs. So should we continue to see similar kind of a situation for the rest of the year?
So, if you see our history, then what we written off in 21-22, we have recovered 95% of that. What we written off in 22-23, we have recovered 75% of that. And what we written off in 23-24, we have recovered again more than 90%. So our portfolio being secured, our recovery is good, but sometimes because in surfacey cases, certain legal things that happens in one quarter, we can see a higher performance in certain quarter can be, but on an average, when we average out, yes, our recoveries will be good, and we don't foresee that any of our accounts will not get recovered. So, and that is why our focus is to do 10 to 40, 50 lakh kind of a ticket size, where the surfacey also, because the segment which we are in, so whatever the company may be, the NPAs will come, and the chances of recovery, if your processes and credit and the valuations of the property are right, the chances of recovery are far better through surfacey than any other mode. And in our the category we are in, with the secured business, the recovery do happen. It's sometimes it is that time lag that only sometimes is unpredictable. In certain times the courts are closed, they go for holidays in summers. That happens from June to May, June. So in certain states, certain things happen. But on an average, our recovery historically from surfacey cases has been very strong. And we are very, very active on that collection and the legal recovery. And we are very proactive in settling those accounts. So that will be there in future also.
Thank you. The next question is on the line of Nirvana from Badrinath Holdings. Please proceed.
Hi, sir. Good morning. Thanks for the opportunity. Sir, this quarter, YOY, your NIMs seem to be compressed. Your interest income has increased by 19%, but interest costs have increased much faster, about 34%. So why did that happen?
So sometimes I would say one problem which we are facing and to some extent, I would say the whole mid and small size and companies, is that most of the disbursements happen in the last week of the quarter, and we have to carry a negative carry happen when we that surplus liquidity has to be parked, and we get a negative carry. That also takes about 0.25 to 0.4% of our overall earnings for that quarter, and that is has been happening for last 2-3 quarters, but we are now more proactive that the bunching of disbursement doesn't happen in the last month of the quarter, and as on this month of this first month, our sanctions and disbursement from our lenders have been far better. It has been an unusual month where we have seen that in first month we have been able to take reasonably good disbursements. So the focus with our treasury team is to that we should not be working, or we should be much more proactive that our disbursements are much more during the whole quarter itself.
Okay, sir. Sir, what is your outlook on NIM going forward? Because and if you can break up fixed versus floating for our loans and borrowings.
So our SM is totally fixed because the segment which we are in, change of tenure or change of interest rates will be very difficult to make them understand, and so we and most of the companies, and we are working on a total fixed interest rate. And in case of wholesale, where we are getting a reasonably good IRR as compared to our median average rate, we are doing it fixed, and certain I would say not more than 15 to 20% of our total portfolio will be on floating. इतना भी नहीं होगा. हाँ.
1% of the portfolio.
No, so you can say that mostly our portfolio is fixed IRR only.
Okay, and what about your borrowing, sir? How much of the borrowing is fixed versus floating?
Borrowing and totally floating, I would say only 5 to 10%, one or two borrowers have given on a fixed rate, and sometimes those resets in certain cases are linked with the T-bill, certain are linked with repo rate, certain are linked with their MCLR, and MCLR do take time to change. The repo has been the best, where the reset happens very fast. Sometimes which are linked with T-bills, the reset is after 6 months to 12 months. So now our focus is to get the fresh borrowings linked with repo and T-bills rather than their MCLR. And where even I would say certain PSU banks have not changed their MCLR even after the 100 bits of repo rate cut. So we have, from the learnings that we have made from last 2-3 years, we have found that it works. Otherwise also, when the interest rates start rising, then the repo rate link get repricing faster as compared to the MCLR link.
Got it, sir. What percentage of your borrowings have been repriced and how much are yet to be repriced, percentage-wise?
What Atul?
Almost more than 50% borrowings has been repriced.
50% has been repriced, 50% are still there.
But then going forward, your NIM should expand, right? Because on your lending side, you will hold rates, whereas your borrowing rates will come down, right? So that's why I was surprised.
We have said that, yes, we have introduced one a little lower IRR product. We don't know that we estimate that it will give only 10 to 15% of our SME portfolio will come from that product. And little bit on the wholesale, I would say the total NIM benefit, the reduction in cost of borrowing for the wholesale, I would say around 50% has, on an average, may get passed to our wholesale customers.
Got it, sir. But this kind of NIM compression, what we have seen in this quarter, hopefully we will not see that, right, going forward? We will at least maintain...
The other element of NIM compression was the negative rate we were carrying, and the focus will be to reduce that. And thirdly, I think NIMs we are also including that money.
The higher leverage ratio. The higher leverage ratio.
Yeah. So the NIMs also include PF, and sometimes in the wholesale, it is lumpy in certain business. Certain quarters our cost is higher, and so more or less our NIM should be same or little better going forward.
Okay, sir. I'll reach out to the team, outside of the call also to understand better. Sir, one request, can you please start publishing NIM and cost of funds on a quarterly basis in the presentation? So that
we will take note of that. Yeah, we will. Cost of borrowing, sometimes we don't want that it should be broadly beyond the pressure, and we have not seen that any of the company, small, mid-size, up to 3,000 crore, we have not seen that so from our, it helps from not displaying publicly our cost of borrowing to even our borrowers on the wholesale side. So definitely on the NIMs, we will start highlighting it.
Okay, sure. I have two more questions on the branches. So, sir, I was looking at your branch network in Q4 FY24, which is about 18 months ago. In Rajasthan, you had 8 branches. Now you've gone up to 15. You've increased 2 this quarter. Gujarat was 7 branches. You've increased to 10 this quarter. But if I look at the Rajasthan AUM, it is flat at 140 crore SME AUM. Gujarat is also almost flat. So whereas, Punjab, Haryana, at least, AUMs have gone up a little bit. So highest branch additions have happened in Rajasthan and Gujarat, but AUMs are flat, and Gujarat, you've also shut down 2 branches recently. So if you can just comment on this whole thing, like what is happening in these two geographies.
Chandan will give you a proper reply, but one thing I would like to add, our foreclosures and prepayments take 13 to 14% of our total rundown has happened in this 7 months itself. So around 40 crores have been run down through foreclosures, and sometimes a little higher ticket size cases, particularly in these areas, in these 2 locations, got foreclosed, and that is why you are seeing, and one reason is the same. And for new branches, I would, as Chandan has explained, it takes time to get the required business. Yeah, Chandan, you can.
Yes. The thing is that what Rohit has told, that foreclosure rates are very important for any particular reason to stabilize the AUM or to decide the AUM of any branch or any zone itself. So for the Rajasthan and Gujarat reason, we have seen that you can even find that the many of the smaller NBFCs are there who are into competition with us, and they are targeting our business clientele, and that's why the foreclosures in particularly these 2 regions are little higher in vis-a-vis North 1 and North 2 portfolio. So you see the stability in the portfolio or AUM of these 2 particular regions of Rajasthan and Gujarat, and a growth in the portfolio of North 1 and North 2 itself. Apart from that, some branches were realigned, not closed. The reason being the business of those older branches has been mapped. The reason being we are finding those branches less cost efficient, and that's why the business has been aligned to the nearest branch, and we have gone to some other location for growing or in search of the new opportunities and the new business itself.
Okay, so what steps are we taking to correct these foreclosures? I'm assuming they are moving out because they are getting better yields from other lenders. So what steps are we taking?
Either they are getting a better yield, and sometimes they don't go for 100, 200 basis. Sometimes when they are able to get at a 12-13% from a 17-18% kind of an IRR, then it becomes difficult to stop, and sometimes they start asking for a top-up at a very early stage, and which we from the credit point of view, we are not comfortable, and our policy doesn't allow to give a top-up within 9 months to 12 months, and we do it very selectively. So that are the 2 reasons which happens, and it is across industry. Sometimes you can't change it. Any regional head or a senior team has gone, and they start targeting your old customers. So that is a normal course in every normal part of this industry.
And apart from that, being into the business, you can't evade the competition.
Yeah.
So we are very much prepared with that. We are opening new territories. We are targeting new geographies so that the new business can be chosen, and we can easily grow the targeted numbers which we are targeting to achieve into the coming financial quarters or the financial year itself. So the foreclosure rates that are very much inbuilt in our projections itself, that this much of the foreclosure are very much into the industry itself, and the IRR which we are maintaining currently.
Okay. And last question from my side. Sir, you are saying from 45 you will go to 60 branches by FY27. You are also saying that average disbursement will go up from 25 lakhs to 50 lakhs for all the existing branches. So if you put all these together, sir, you are looking at SME vertical growing at 40-45% kind of CAGR for at least 2 years. So, sir, are we really geared up as a team mentally and in terms of infrastructure to drive this kind of growth, or do you think that, branches growth will always be way ahead of AUM growth for us in SME? How do you see the next 2 years?
Look, in last 4 to 5 years, we were always talking about the processes, SOPs, building infrastructure, building systems. So now we have, from last 8 to 10 months, we believe in ourselves that we are system ready, we are infrastructure-wise, we are ready, human resource-wise, we are very much ready. And that's why we have started taking a leap to grow our book into with that pace itself and projecting a number, giving you numbers of 800 or 750 odd crores of SME AUM itself. So prior to that, we were never commenting on the AUM part or anything like that. So as of now, we believe that we are very much infrastructure ready. We are very much in terms of people, pricing, product, portfolio and places. Even the branches that we are, or the areas, geographies which we are targeting to open up in coming quarter system, we are very much infrastructure and people-wise ready for those locations to pitch in.
Okay. Thank you. I have more questions. I will reach out.
The only thing that if we see that in certain location or a certain branch, the quality issues come, then otherwise, as a company in terms of our processes, team and everything, we are much more geared up to achieve those numbers. And at the same time, maintaining quality will also be we can't overlook that part only, just to achieve the numbers.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ankit Gupta from Bamboo Capital. Please proceed.
Yeah, thanks for the opportunity and congratulations on a good set of numbers. Sir, my first question was on the environment on the SME side. So can we say that the things have improved significantly, and given we are also looking to push the pedal on the SME growth, the environment has improved significantly over the past quarter or two?
Yeah, I would say internally we are much in a better position in terms of team, our infrastructure and SOPs. But cautiously, we will still be cautious in terms of external environment. Yeah, as compared to what has happened in last 2.5 years, the peers are much more cautious in terms of everybody has tightened their policies a little bit in last 9 months to 12 months, and the attrition rates have come down. So if we see those environments, so from that point of view, they're much better. Yeah, a little bit. We have seen that due to aggressive lending both on MFI and in the unsecured portfolio, and that spillover, we had the effect of those spillover we have seen in the last 4 quarters, and going forward, those the negative effects of those will peak out, and the overall external environment will also improve.
Sure. So, given how things are currently, and our processes in place, and
you're not able to. Can you just speak a little loudly?
Sure. So what I was saying is, given how the environment is currently and how we have improved our processes and set up a good team, can we look at crossing 2,000 crore of AUM in FY27 by March 27?
I think we have. Let's talk on March 26, and yes, definitely. We are here to grow ourselves, and with all other parameters keeping in mind. And yes, I think we'll be able to give a better picture after March 26.
Yeah. Sure. And third question was on the expenses side. Our employee and the other expenses. So over the past 2-3 years, this have kept in line with our AUM growth and we haven't got a benefit of operating leverage on that front. And given how we are looking to expand branches going forward also, so should we expect this expenses to grow in line with our AUM growth, or you think there is some room for kicking in some squeezing in some operating leverage here?
Good to think more or less our middle team is quite geared up even if we open more branches. So the cost will only come from the branch level, and one or two senior level team members may join in next 3 to 9 months. So marginally, yes, as we achieve those numbers, our OPEX should come down. And it should be in line with the AUM growth as currently what we are having, and we may be able to little bit squeeze it.
Look, we are not commenting on any like AUM targets, sir, but you even understand that playing in the role of operating leverage starts playing the role when a particular level of AUM has been achieved. So we are targeting a particular level of AUM. So I'm not commenting on exactly what AUM is. Definitely post that we would be able to squeeze out the operating leverage part has started to play in, and we would be able to reduce our OPEX costs as well.
Sure. Okay. Thank you. Wish you all the best.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Tejas from Prudent Equity. Please proceed.
Hi, sir. Good afternoon. First of all, congratulations for the great set of numbers. So I had a couple of questions, and my first question was on the disbursement side. So if we look disbursement for this quarter, so they were down both quarter-on-quarter and year-on-year basis. So what quarterly disbursement can we see going forward for H2 FY26 and then next financial year FY27?
No, I think if you see the disbursement numbers, our disbursements in the SME is higher by 63% quarter-on-quarter and 93% year-on-year. And its wholesale is always a lumpy business. Wholesale, we see lot of prepayments. And when collections are higher, our disbursements also increase. It is not that our portfolio goes down, the total AUM goes down. Sometimes we have seen that the wholesale account which we have boarded for 3 to 4 years have run down within 18 months itself. So there was little lumpiness, and the collections were marginally lower. It is not that there is a stress in the wholesale. It is not the prepayment in the month of last quarter was little lesser, and with Diwali and all kicking in so that otherwise our disbursement on the retail was far better year-on-year and quarter-on-quarter.
So what quarterly disbursement, overall disbursement can we look at for next financial year?
You know what happened? Certain 2-3 accounts got foreclosed in the wholesale in the last week of September. We did a reasonably very good business in October. So wholesale, it is better to see not quarter-on-quarter on year-on-year, but our total AUM doesn't go down. It can momentarily drop for 15 days or a month.
Oh, okay. And okay. So and second question was on this active accounts of SME. So there was sudden jump in SME active accounts for this quarter. So what measures did you take while disbursing to SME, and how do you see at the SME sector as a sector?
This was
due to the growth in disbursement.
As we commented, that we saw that we have seen a good disbursement in the last quarter. So because of high disbursements, we can see a net increase in accounts, because this was one of the quarters in the last couple of quarters that we've actually seen a good increase in disbursements.
We have moved to totally RTGS method. Now no cancellations are not happening, which used to be 25 to 30% kind of a scenario in last year. So we have improved our processes, and due to that, we are seeing higher active accounts.
Okay, so and what AUM target are we looking at for FY27?
We just spoke about it.
I think we have spoke earlier. We have given a target for this year, and next year we are able to do that, and with the quality and everything, I think we should be striving for a better growth. but we will give those targets at the end of this financial year.
Okay, understood. Thank you, sir. That's all from my side.
Thank you. Participants who wish to ask a question may press star and one now. The next question is from the line of Sanjay from Bastion Research. Please proceed.
Hi, sir. Thank you for the opportunity. So just wanted to know that we are focusing on an SME side and we are raising the ticket size as well. And as you already spoken about that this segment which we are catering is purely a secured segment. And what I see and understand from the industry players, everybody is focusing on, secured segment aggressively now because of the MFI stress and all that. So banks and NBFCs all are focusing on, and because your ticket sizes keep on increasing, how do you see this competition, kicking up? Because previously we were in the lower ticket size segment, so the competition is comparatively lower. So if you can share those insights from your end, how do you see that aspect?
Rekuna, you are absolutely right. Competition was always there. It has not that it has increased too much. Yes, of late, MFIs, who have been traditionally into MFI business for last 5 to 10 years, have suddenly shifted themselves to doing us micro lab, less than a 10 lakh ticket kind of. Most of the MFIs have started focusing on secured 0 to 10 lakh kind of a bracket. And I have told in my earlier conversations also that 0 to 10 lakh kind of a bracket with the kind of security coming in, and with most of the lenders don't having a SARFAESI tool with that. Even if they have a SARFAESI tool, the cost of that doesn't make is too high. So we have already said that our focus is between 10 to 50 lakh kind of a segment, and what kind of the learnings that we have made in last 4-5 years with those players which were totally into GLG loans for last 5-10 years. So it takes little time for those companies to learn and make those processes, build that team, and I think that it's a time where we are little better placed as a company as compared to the new competitors which are coming in, which are mostly from the unsecured and MFI segment, and most of them are focusing to build their book through both on their own book and doing most of the BC business. So business correspondent for other NBFCs, and yes, right now so the ticket size segment is different. They are just starting up and building up. So we don't see any kind of competition, and the existing players are still there, and we have to live with. We have a lot of geographical penetration is still too low. We can expand ourselves, and there is a lot of scope to grow ourselves. And as a company, we want to remain focused in few products, and with those learnings and knowledge, that can be a little USP that we can have as compared to the new entrants which are coming into this segment.
Sir, why I am asking, why I am asking is because, our NIM stands at around roughly 7-8%, and we give the yield on advances on side is from 18 to 20, which you are now saying that it's moving down near to 16%. So what I am trying to understand.
No. We are saying our weighted IR will remain at 18%, 18.25. It is only that we have introduced one product which will not be more than 15 to 20% of that, and that will have a weighted IR of around 16%. But certain we do even in 22 to 24% also. So our weighted IR will remain. It is only that our product
only we are increasing our interest rate basket only, so that we would be able to cater more and more customer, and we can increase our target segment from 16 to 22% kind of bracket itself. So it will not be tough. It would be just open new doors or new avenues for us to do more business in coming quarters and coming financial year itself. Apart from that, the point which you have asked about the competition itself, we have already mentioned that in any business you cannot evade from the competition competition, or you cannot rule out the competition. So we are very much prepared for whatever the competition it is. The key in the segment, and the retail segment, what we have learned from last 3, 4, 5 years of our experience is the service delivery, that how much faster you are processing your files, how much SOPs or how much strong processes which you have built. So we are very much now focused on the TAT. We are very much focused on the service delivery. We are targeting to reduce our disbursement time so that we would be able to board more and more customers. As Rohit has told earlier also, that our competitors, which we are finding which are doing micro lab kind of business or doing into a kind of BC model, the average start is much more, that it comes around the 25 to 30 days. So we are targeting that we would be disbursing any files, but like login to disbursals for a ticket size of around 20 lakh rupees up to 20 or 25 lakh rupees file in 7 to 15 days itself. So if we are able to achieve that kind of TAT and all that thing, definitely we would be able to do the business which we are targeting for.
Thank you for answering. So my second question would be on, as you, sorry if I heard it wrong, but you mentioned that our cost of borrowing from 10.9% going closer to coming to 10.3%. But what I understand is some of the PSUs has not, give you the benefit. So for another year and next year, do we see 50 to 100 basis point benefit accruing in the cost of borrowing side? Is my understanding correct, or you can share on that side?
I think unless until repo rate goes down, 100 bips will be little difficult. Yes, we can target to go down to another 0.25 bips if everything remains same. But what has happened now, the liquidity is there with the banks. Even they want to deploy funds, and now they're being little cautious on the MFI and unsecured NBFCs. They are focusing on with a better rating, and so that is also the one benefit we are getting in last 2-3 quarters. So, but seeing 100% bips with everything remaining same as on if the repo rate there is no change, so that will be little difficult, and that can only be achieved when we see a one rating upgrade. Even
sir, also even that you still not see that. Understood, sir. Sir, we also mentioned some of the inorganic growth. While you have mentioned that that's not the focus area for you, but in my opinion that you might be seeing something interesting worth taking a bet or in the evaluation process. So can you share more detail on that?
No, opportunities are coming because those companies with less than 150 crore AUM, their cost of borrowings and their OPEX cost are not able to justify, and they have also realized that maintaining quality and maintaining other operational metrics. So they are looking to merge themselves or all those things. So those kind of opportunities are coming, but we have, as a company, we have to see that whether it makes sense to us, and if it, then we will definitely do it. But right now, to we somehow one or two opportunity come, we only evaluate it, but nothing has been firmed as on date. And still our focus is to grow organically. But if some good opportunity comes in some with a limited risk and exposure, it can be seen.
Thank you so much, sir, for answering my question. All the very best.
Thank you. As there are no further questions from the participant, I would now like to hand the conference over to Mr. Rohit Gupta for the closing comments. Over to you, sir.
So first of all, I'd like to thank your team and Sayam for this phone call, and I'd like to thank all the participants, and hope to see everyone in the next year at the end of the new financial year with the better numbers and what we have given, and we achieve those numbers. Thank you all. Thank you very much.
Thank you. On behalf of TIL Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.